Hi, I'm Andrew Roberts from Great Property Meet, and I'm here tonight with John Corey from Property Fortress. Hi, John. Pleased to meet you. Great to see you. We're here tonight, just before the Great Property Meet, and we're going to be talking about creative finance and raising finance tonight, legally.
Yes.
Now,
Important word there.
absolutely, you've got to do things legally.
We're going to hold their feet to the fire.
Quite literally today. So, you're an expert on property, and you've been in property over 30 years, and quite an expert on things like technology, a good analyst on the marketplace, and you know quite a bit about how different things interact. Complex subjects like how tax, interest rates, Brexit, technology are changing the marketplace and interacting. I mean, if we picked off one of those, say interest rates and how it's likely to impact, what's your sort of analysis and thought on that, John?
Well, historically, interest rates have almost never been lower. We're like 300 something years ago, maybe. It's easy to assume interest rates will go up.
Yeah.
It may not happen for a while. It depends on relative economies, the US versus the UK. Also, what's going on with Brexit in the UK might dampen that inflation pressure, or it might trigger a lot of inflation pressure. But any longer term property investor really should assume rates are going to go up. And you want to future proof your portfolio from that exposure. In particular, also with the tax law changes, what was called Section 24, when it was legislation, is removing the deductibility. So having high interest payments is not a good thing.
No.
It has a negative effect effectively on your cash flow. So rates long term are going to go up. You're paying more taxes. My suggestion is have less debt.
Yeah.
Now that might mean you have to buy and sell a few properties for the one you want to hold, so you don't need the debt. You also may want to look at long-term fixed products, 5 or 10-year fixed products, so you give yourself plenty of runway before you have to deal with directly an interest rate rise.
Mm-hmm. Yeah, I mean, I remember interest rates. We were talking earlier about 15.95%. If that happens, highly geared landlords these days are likely to be, should we say, smacked over the nose quite heavily in terms of the impact it'll have on their business. A lot of them might not be trading.
There's definitely that risk. And what's quite funny is that spike was a very particular point in time in Britain. Mm-hmm. It's when the UK fell out of the ERM.
Yeah.
So it was a currency crash. It was an interest rate spike. It was a political event. Well, funny enough, we're having a political event. It's like,
absolutely, it brings us into Brexit, doesn't it?
I don't know that Brexit will trigger anything similar. I'm
Mm-hmm.
not saying it will. I'm not saying it should, but it wasn't exactly predicted other than George Soros last time around. So you need to be able to weather that storm if it happens.
Yeah, and things like I've been predicting with Brexit, things like Standard & Poor's, Moody's are likely to change their view on the UK outlook. And last week it was reported in the press that S&P are considering downgrading the UK's credit rating again from where it is. Do you see that as having an impact on investors, trickling through those investors that are borrowing funds?
Well, as you probably know, and some of the people listening know, essentially you always start with the zero risk of default instrument. So that tends to be the government issued sovereign debt, the 10-year whatever bond, the 5-year, whatever the right period is for that country.
Yeah.
And that is your base reference. And if that goes up or down, everything else goes up or down with it. And while there isn't a perfect coupling, generally it's very correlated at some level. So what you'll find is if the country's credit rating is impacted, or maybe just the investors are less happy to fund the debt at the interest rates being paid, or the currency drops by 5 or 10%. So if you own the bonds, I don't care what the interest rate is, you just lost 5 or 10% of your value. So all of those things can lead to the government needing to issue bonds at a higher rate. That will filter through because all the other capital falls in line, and therefore landlord will have a higher rate to pay. Now, whether that can be passed on to the tenant is debatable. Sometimes it can because there's more demand than supply. Other times it's a complete nightmare.
Yeah. And in terms of taxation, obviously there is a whole raft of taxation, some of which is being phased in, some of which has already come in, such as stamp duties, the Clause 24. And do you predict that altering investment approaches or the price of the assets? Do you think it'll have an impact there?
So when Section 24 was proposed, which is now Clause 24, I believe, in the tax code,
Yeah.
that was not seen as such a big issue compared to the 3% uplift in stamp duty. And everybody's freaked about the stamp duty. And as one speaker who's quite well known, very sort of sage speaker, said, it's a difference in the price. You'll do
Yeah.
your numbers, you'll figure it out. It's a one-off.
Yeah.
Whether you offer 3% less, whether you just absorb it. If it's a deal, it's a deal. If it isn't, it isn't. But this tax impact from your deductibility of interest is a much bigger, scarier thing. And we're only now starting to see some of that. Some people obviously did their homework. They saw it a long time ago. But frankly, it's hitting their wallets now. And the people who didn't see it coming are the ones that are like, oh my God.
Yeah.
At the flip side of all this, and the whole flip side of Brexit and the housing market is the population going to go up or down?
Yeah.
If the population keeps rising, and we're still not building enough housing, so our supply is lagging our demand, we will continue to see pressure on the rents. We'll continue to see pressure on the values of the property. There's affordability, there's a limit to what people can afford, so wages and demographics matter. One of the biggest reasons that you see a rise in demand is the 60-year-olds plus, and I'm old enough to say this, are not dying off young enough.
Yeah.
So they're living till 90 or something. Well, that is keeping a lot of housing stock tied up that used to be recycled. We are now needing more supply for the same size population because the people are living longer. We have a lot of negatives when it comes to the supply side. We have lots of positives on the demand side. With the whole Brexit settlement, the Europeans who are already here are going to stay. We're still saying we have skills shortages. We're going to have to bring in more foreigners. Obviously, I'm one of those.
Yeah.
We'll have to bring in foreigners to actually fill certain roles and certain jobs. There's no sort of end in the short term to this demand issue. So I think as a landlord, you'll be fine if you can isolate yourself from the interest rate concerns and from the tax deductibility issues.
Mm-hmm. Well, that's really great because in a number of areas, I mean, you've touched on the aging demographic of the population. I mean, as a market analyst myself, I look at that sector of the market and say, we need to incentivize the older generation who tend to be blocking up larger properties and look at removing taxation burdens on them to encourage them to move into, should we say, more purpose-built type settings.
It's not their fault.
No,
okay? But
no.
there is this disincentive with the stamp duty to trade down.
Mm-hmm.
You don't have a capital gains issue if it's your primary residence, so that's
Yeah.
not a problem. So it's almost entirely stamp duty. And I wouldn't even say necessarily that's actually a big block. There's a lot of comfort to living in the home you've lived in for a long time.
Absolutely.
What does tend to motivate you to move is you're no longer able to do what you used to be able to do.
Mm-hmm.
The property's not fit for purpose. But is there actually a good sort of all-inclusive older care from living on your own to minimum care to shared facilities to day-to-day care?
Yeah.
That type of housing progression is what's needed. We
Mm-hmm.
don't have a lot of that right now. That could be a big growth
No.
opportunity.
It's big abroad, but it's not big over here in the UK, and I think that is the gap in the marketplace. I mean, the final thing...
Excuse me.
Bless you. The final thing is in terms of technology and property. I mean, your background, you used to work with Steve Jobs from Apple.
Yeah, he was my boss. Technically, when he was at Next, and I was at Next, not Next, the retailer, Next, the computer company.
The computer company, yeah.
He leaves Apple, gets kicked out, creates his Next company called Next. That's when he was my boss, yes.
Excellent. Well, you're from a technology background. That's been your sort of career progression. That's what brought you here to the UK, I believe, as well.
Yes.
So I love to sort of look at how technology can make an impact. What sort of 2 or 3 things do you think are going to make a big difference to the property sector?
Insulation, smart metering, people paying for the water they use, people actually having devices that are intelligently manage the operation of the house when it comes to how it's temperature controlled, ventilated, things like that, the ability to reduce the sort of rating issue when it comes to the environmental impact.
Yeah.
Those all help, but that won't happen very quickly because you tend to get that in the new stock, you don't tend to get that in the old stock, and it takes quite a bit to retrofit,
Yeah.
and it's not exactly easy to do. What you do, maybe if you could eliminate some of the other inefficiencies, whether it's real-time financing decisions and things like that. So the whole prop tech thing is a bit overrated when it comes to buildings of the future. The corporate side will have more incentive to do that. Where you might see a bigger change, which is both technology but also physical lifestyle, is the co-living, co-working, cohabitating, whatever you want to call it,
Yeah.
where individuals have the ability to live somewhere based on where they want to be, family, friends, jobs, and yet they don't necessarily have to be an owner. And if we can then decouple or deconstruct ownership from where you live, so you can get the economics of being on the property ladder
Yeah.
while you're actually living wherever you want to live, and there's no strings, and you don't have to sign for a mortgage, but your savings is tracking. So
Yeah.
that I think is probably a bigger area for advance.
Well, I was going to say, the rent to buy, I've helped a number of people over this past 12 months achieve that objective.
Or just rent, period, no
Yeah.
buy, and
Yeah.
then independently you invest, and you've decoupled your investments
Okay.
from your ownership.
From the ownership.
Yeah.
No, that's a different way of looking at it as well. That's brilliant. Well, John, thank you very much today for the insightful view into what I call a strategic analyst on a marketplace. And I always love reading your articles in Property Investor News.
Thank you.
I'm sure if you want to catch up with John, you run your own property networking event in London.
Second Tuesday of the month.
Second-
It's 14 years already. It'll be 15 in April.
Congratulations.
So people can find out about that. They can find me on social media if they want to know about the meeting.
and you've got a
and,
website, Property Fortress, as well.
PropertyFortress.com.
Yeah.
The events page will tell them about the events.
Superb. So we'll put those websites just down here for you to click through to, right down at the bottom. And John, it's been a pleasure to meet you today. I'm looking forward to hearing more from you tonight at the Great Property Meet. And if you want to come along to the Great Property Meet, we meet on the third Monday of every month, and you can meet great speakers like John.
And have great fireplaces. Keep
Absolutely.
on your hands. And
It's really great sitting here in front of the log fire. And if you come along to our Christmas party on the 10th of December, you can get to enjoy this as well and meet John in person.
and the
And the Christmas jumper as well, because we're all wearing Christmas jumpers today. I'm about to change into mine. Thank you very much. John, thank you.
Thank you.